uncertainties. We are honored to have two speakers with us, Mr. Tan Gan Leong, the Head of Investment of CAF Investment Funds Berhad, and Mr. Suhaizi Reza Selamat, the Chief Executive Officer of UOB Islamic Asset Management Sdn Berhad. Allow me to introduce our esteemed speakers. The first speaker is Mr. Tan Gan Leong, the Head of Investment of CAF Investment Funds Berhad. He holds a Bachelor of Business degree majoring in both Economics and Marketing at Monash University, Australia. He's a CFA charter holder and a CMSIR license holder to carry out regulated fund management activity. Mr. Dan joined CAF Investment Funds in 2013 as an investment analyst, where he was responsible for conducting in-depth research and analysis across markets in the Asia-Pac region. Before transitioning into the financial sector, he gained valuable experience as a business development executive in the manufacturing industry, where he honed his skills in the marketing and strategy and client engagement. Our second speaker is Mr. Suhaizi Reza Selamat, the CEO of UOB Islamic Asset Management Sdn Berhad. Reza has more than 25 years of investment-related experience in the financial services industry. Starting his career in the Treasury Division of a Malaysian bank, Reza dealt in multiple financial instruments, including foreign exchange and derivatives for both proprietary trading and corporate debts. He moved into asset management in 2002, covering sales, marketing, distribution, training, and product development. He was based in the Middle East in 2008 and 2009 to develop the Middle Eastern markets for Malaysian asset management outfit and specialized in Islamic asset management since 2010. In 2017, Reza joined and developed UOB Islamic Asset Management as the Regional Islamic Center of Excellence for the UOB Asset Management Group. Reza obtained his MBA, specializing in Islamic finance from UC Malaya, and graduated with a Bachelor of Commerce degree from La Trobe University, Melbourne. He's a holder of the Securities Commission of Malaysia, Capital Markets and Services Representative License for Fund Management since 2011, and is a Sharia registered financial planner by Malaysia Financial Planning Council, MFPC, since 2019. Let's start the discussion. Allow me to point this question to Mr. Gan Leong. How have Trump trade policies, particularly the imposition of tariff, influenced global geopolitics, particularly China, Mexico, and Canada? And what implications do these changes have for market risk and investment strategies moving forward? Over to you, Mr. Gan Leong.
So I think this year, first of all, I want to thank everyone for attending this roundtable today. I appreciate that you take a large chunk of your time, from a weekday to attend this presentation. So basically, I think when Trump entered office this year, he started, pushing through all his policies, and it took people by surprise because I think number one, people were expecting everything was, should be or would be have targeted to China only, but then he actually went after his closest neighbor, Mexico and Canada, which was very surprising to everyone actually. But it seems like this time around, Trump isn't exactly just going after China. His agenda right now is actually, it seems like it's to boost America's production, trying to be self-sufficient, try to create jobs, try to bring back jobs back to America. So it's no longer a case where, struggle of two superpowers, trying to go after just China. But this time round, he's just looking at, what can be brought back to America. So because of that, it took everyone by surprise, actually took their allies as a surprise. If you look at the series of events this year, right, at the start of the year, the one thing that got actually caused a lot of turbulence in the Malaysian equity markets was when Biden was introducing the Advanced Chip Act. So when he was pushing it through, if you look at the Advanced Chip Export Act, what they were trying to do is they only allow these advanced chips to be exported to their ally nations, people who have been playing nice with them, the likes of Japan, the likes of the European countries, Canada. However, that actually impacted Malaysia because Malaysia was categorized under the tier 2, which we will get limited supply of advanced chips, So that's the start, where we ourselves actually begin this year. Then you saw yourself, your construction players, your likes of Gamuda, Sunway Construction, your smaller M&E players, those that have been benefiting from these data center inflows. So I think what happened was, back then, people thought that, okay, it's just going to go after this China thing. It's going to be all about data centers. Then when Trump entered office, things changed again. He went after Canada, he went after Mexico. So what can be certain right now is volatility. That's one thing. The only thing that I can be certain right now, what I can tell people is it's going to be a very volatile period for not just the next few months, but I would say even for maybe for next few years during Trump's term. You see, today he have a lot of plans, but these plans takes time to put into action. Actually, even right now, I can't even give you an outlook because in the next week itself, we do expect, I do believe that, Trump have been already telling people, April 1st will be Judgment Day, right? So he's going to come out with the list of how much tariff he's going to place on different countries. And I think what we can expect is there will be a lot of volatility, especially in the near term next month. I think markets will be very volatile for nearly all risky asset classes.
All right, thank you, Mr. Gan Leong. Mr. Reza, do you have anything to add?
Yeah, I think firstly also thanks to Phillip Capital for inviting us to speak today, and thanks to all the participants as well for spending the time, is what Dan was mentioning. So I totally agree with whatever Mr. Tan has shared, and in fact, my summary is going to be exactly the same. Volatility is going to be the game of the year. It's uncertain, and markets do not like uncertainty. When there's uncertainty, that's where you see the volatilities. And Trump, he can get up suddenly on this side of the bed and suddenly decide to come up with some new policy which might shock half of the world or whatnot. So he has basically redefined trade relationship, right? From being friends all these years with Europe and everybody else, suddenly he comes into power and here have a 20-30% tariff implemented. So that is something that he is reinventing, and unfortunately, it is painful for the world. Now, I was looking back at why is he doing all this? He had his previous term as a president, and we saw he was already starting with China. Right, but then I suppose over time he realized that that's only a certain portion. There are many other partners as well that I can look at, and I can widen my net, cast my net wider, for example. So then that's where now you see Mexico, you see Canada coming in, those are the nearest one. Then Euro is also coming to the picture. So all these are part of his objective, to me, to help also, which is good for the US, to reduce their external debt. They got about 36 trillion, if I'm not mistaken, about debt. So this, to me, is one of the ways of how he could perhaps do this. And more importantly, all his policies needs to be done in the beginning of his term, not towards the. This is a trend in politics. If you haven't, even in Malaysia, you tend to do the bad news at the beginning of your term and the good news later down the term. So hopefully the worst will be over in the next 1 or 2 years, which we need to ride out this rough patch. And hopefully it will be smoother, and then we can hopefully benefit all of us down the road. But as what Mr. Tan was saying, it's hard for us to forecast. So we'll have to wait and see. But what is for sure is the volatility, uncertainty of markets is here to stay for the Trump term.
All right, thank you, Mr. Gan Leong and Mr. Reza, for your view. So basically, we hear you on the volatility and uncertainty that's coming ahead. Let's also talk about the monetary side of things. We see that the US headline CPI remain sticky, and it seems that it's unlikely to return to the Fed's 2% target. And now the unemployment rate is also quite low at 4.1%. Mr. Gan Leong, do you think that there's a chance that we may not see any rate cut this year, despite now market is pricing in probably about 50 bips to 75 bips of rate cut this year? And now with the tariff coming, probably it may also complicate the Fed's future policy decision. I'd like to hear your thoughts, Mr. Gan.
So I think for the Feds, right, they're going to be very data dependent right now because number one, a lot of policies trying to be pushed through, and like it or not, all these policies that are trying to push through is quite bad for inflation. I mean, you start to put tariffs on everyone, right? What happened is this cost, at least a large chunk of this higher cost for these importers, right, will be passed through to consumers. So you're going to see a one-off CPI increment. So I think some will argue that, you know what, it's a one-off increment, right? It's not a consistent inflation going up. Hence why, the Feds may just look past it, but it may not be the case, you see, because a lot of times, right, you think about how people are passing through this higher cost. A lot of businesses are not going to, let's say you suddenly your cost of import goes up 15, 20%, let's say 20%. You're not going to increase your cost immediately by 20% because you're afraid that you may lose the customers. And let's not forget, you have competitors as well, right? So your competitors who's trying to get market share from you in America may decide that, you know what, I'm just going to increase prices by 15%. So you see, so you have to find the right amount where what is the amount that I can pass through to my customers right now without losing my market share. So I do not believe that a 20% increase in tariff, 20% increase in import costs will immediately all be translated and passed through to consumers. So that pass through to consumers will be done on a gradual basis. So then it becomes that you'll start to make inflation look a bit more sticky than what it would have been, right? Even though it's a one-off impact. And furthermore, we do not know whether countries will retaliate and then Trump may increase another 10% on retaliation, which he did say that he will, whoever were to retaliate, he will increase their tariff even higher. So that is also another factor we have to put into place. So right now, we do not know how much tariffs is going to place on each country, but I think it's very difficult to be in the Fed's position at this juncture because I'm pretty sure that the Fed chair couldn't even tell you right now how many cuts they're going to do, or even whether they're going to stop cutting rates or not, because we have to see the impact to the data. And right now, even before Trump actually declare how much he's going to impose to each different country, there's absolutely no clarity on this manner. So like I say, at this juncture, it's definitely going to complicate the situation, the Fed situation, and I would believe that, everything's very fluid. We have to really, we like I said previously, the only thing that's certain is volatility. I think it's very difficult for us to come with a view right now, especially for the whole entire year. I couldn't even tell you next month how many cuts they're going to price in. Things may change even next month itself. So I think at this juncture, it's still very uncertain.
Yep, correct. I think Mr. Ghanaian rightfully pointed out that the only certainty now is volatility, right? For sure, and it's also very, very difficult to see what's Fed's future policy decision going forward. And adding to the tariff, some other countries may also impose retaliatory tariff against the US. Mr. Reza, do you think what is the best strategy to navigate along the market challenges right now?
Best strategy to navigate the market forces now. To me, okay, given just now we were mentioning that volatility is a given, right? So meaning that if you want to invest on the basis of news, which can change on a daily basis, you have no idea what is going to come, what Trump is going to say, whoever is going to say, China reaction, who's going to retaliate, is Israel going to attack, is Russia going to attack? I don't know. There's so many bad news out there, right? So on that basis, to me, what is that important is to look back at why are we investing? What is our objective? Am I an investor or am I a punter? Right? If I am an investor, for example, then these are all noise. Because why? I am looking at the long term. Noise on a daily basis, there's so much noise, right? It's like you're driving a car you have this traffic light, you got that horn, whatever. But when you drive the car, your objective is, I want to go from point A to point B. Got policemen, got speed trap, don't know. All these are all noises, but what is important is I reach to point B. So same as investment. You have plenty of noise along the way. It is important for us to know what is our objective, where is our destination, and from that, we decide what do we want to do. Right? So if you have decided you are an investor meaning that you are here for the long term, let's say 3 to 5 years, or to your retirement, 10 years, 20 years, whatever your age might be, right? So keep that in mind. And all this noise is secondary, but you have the objective in place, and then you can plan your investment strategy based on fundamentals, right? Because to me, at the end of the day, whatever the noise happens, if your fundamental is strong, if your fundamental of the company, of the investment is solid, in the long run, not the short-term volatility, but in the long run, that investment hopefully should pay out. Because why? If the fundamental is strong, that company should do well. It should, the share price should be reflective, and then you should be able to reap the returns. It's like your car. If your car is solid, you will be able to reach your destination safely in one piece. But if your car you don't service for the last 10 years, I expect it to die at any point of time. So, so to me, so it's a very generic answer. To me, the best strategy is first to look at what your objectives are, and these are just noise on a day-to-day basis, right? And if your view is long-term, have the fundamental in place, which most of the fund managers, that's what we do. When we invest, we look at the fundamentals, right? Yes, we do have to adopt our strategies according to the daily noises, but our main approach is the fundamentals, and sometimes we will try to stick to it, because we cannot be riding through all of these tantrums and retaliatory effects of the world. Thanks.
All right, thank you, Mr. Reza. I do agree that it's very important for the investors to circle back to their investment objective. What's the reason of their investing? Is it for short term? Is it for long term, and so on? And I also agree that given the current clouded headlines, it's very challenging to position investments effectively. Mr. Gan Leong, what key factors or news should investors focus on to guide future investment decisions?
So I think for us, okay, I totally agree, Mr. Riza here, whereby, I think as an investor, we have to understand what's our objective, right, for investing, right? Okay. So we have constantly been communicating to investors that, take a longer horizon, when you invest in equities, especially. Of course, if you're looking at 3 to 6 months time frame, I need to make X amount of money, then I don't think you should put that money into equities, because equities, it's volatile, right? You should put in, many money markets or even fixed income products, right? However, if you invest in equities, you need to have a longer term horizon. Now, for us, what we do is, what we see in the news today, it creates volatility, and volatility works both sides, right? So in the sense that there will be, sudden sell-offs here and there, markets may go up 2-3% and then come down to 3%. So for us, we need to understand, what are we investing in? The companies that we invest in. So I think at this juncture right now, because of the potential tariff that Trump may place, we are a bit careful on investing in companies that is very dependent on exports, especially to America. So we are right now, what we're looking at is we try to invest in companies where we think that if, let's say, Trump were to put a 15-20% tariff to Malaysia products or Malaysian exports, these companies that we invest in will not be impacted. Whereas the earnings trajectory that they have guided us for the coming year and for next year will still be intact. So I think these are the stuff that we are looking at right now. So we just see this noise that's happening around that creates this volatility as an opportunity for us as investors to actually deploy our capital. Because, because of this volatility where we face, where, there'll be sell-offs, and potentially there could be a sell-off once Trump announced, the amount of tariff that he placed on every country. It creates this opportunity for us to invest in companies that we could have never gotten to invest in at this attractive entry point. It's because of this sudden panic, people are dumping, we'll be able to accumulate a company that actually probably would not have been impacted at all. So time and time again, you see when the market were to sell off, right, everything sell off together at the same time. You won't see just a small fraction or certain sector. Or usually when the sell-off happens on the bad days, you see 900 to 1,000 stocks, all coming down at the same time. Good companies who are not impacted also come down. So it creates opportunities for us. So that is what we are looking for. That's what we have been monitoring. Companies that we have been keeping in touch. We are stock pickers by nature. And if anything, the situation right now actually benefits active fund managers. So for us, I think we are still very focused in what we do, and what we are monitoring and what we are looking at is still on a micro level, which is what is happening in the companies that we are investing in, and not so much on a macro level.
Yep, thank you, Mr. Gan Leong. Mr. Reza, do you have anything to add? What are the key factors or news that investors should focus on to guide their future investment decision?
Yeah, Mr. Tan had shared it quite well, which is also quite similar to how UOB Asset Management also practices it. So it's I mean, I was sharing earlier that these are noises, right? But when we want to look for opportunities, these are where the noises provides you the opportunity, right? But you have to be well positioned, well informed to take advantage of the opportunity. This news comes in, for example, you must be able to assess immediately, hey, is this which company is going to be affected? Which one is going to go up? Which one is going to go down? So like what Mr. Tan was saying, that's where you then identify which are the good companies, which are the value, the undervalued that you have suddenly found, and that's where you want to jump in. So for you to be able to take advantage of that is something, unfortunately, that it needs to be your life. 24/7, you got nothing else to do but be a fund manager lah. So I mean that's why the resistance of this particular industry, where we spend our life just looking at news, studying companies. So we take the worries out of the investors, and hopefully we can help them in achieving their objectives. So that is the aim of all the fund managers, I believe, in town, and in fact even the world. So yes, there are volatility, but volatility is if you may, is a two-edged sword. There are risks, but there are also opportunities. But you need to know where to find them.
All right, thank you, Reza. Mr. Gan Leong, you mentioned about you are cautious on the Malaysia export oriented sectors. Malaysia market has been very volatile. In fact, you see some of the sectors like tech, healthcare, construction, utilities, all are not doing well year to date. Is this a potential flaw for the market, for Malaysia market? And is it a good time for investors to enter?
Okay, so for us, we do find it very difficult to find the bottom of the market. Time and time again, for instance, if you look back in time, 2020, when the COVID pandemic started, who would have thought that, sometime in March, the market had found its bottom, right? So I think it's very hard to identify the actual bottom of the market, because we do not know what's pricing and what's not pricing yet. But for us, that's why I think for a lot of times when we communicate to investors, there's a reason why people do this dollar cost averaging, right? Because it's very difficult to find the absolute bottom. And I think even the likes of Warren Buffett couldn't time the market. He have clearly explicitly tell everyone that it's very difficult to time the market. It's a fool's errand. So that's why I do believe that investors, you can do a dollar cost averaging, instead of, trying to find when is the bottom and I just enter there and then, so just spread it through. And as for, are we close to the bottom? I'm not sure. But what I can see is, like you mentioned earlier, the tech sector itself got hit very badly. This is one of the most impacted sector. But we do find opportunities within the tech sector. We actually see some companies that we have spoken to and some companies that we have invested quite a fair bit into, that actually benefited a lot from this trade diversion. Now, it's not mainly just because of Trump. This thing actually started even during Biden's time, whereby they realized that they have to start to diversify their manufacturing base. They cannot be so dependent on just China. So we do see American companies, start to, look for other manufacturing capacities elsewhere to take up their jobs. So actually Malaysia, like it or not, we are benefiting from this trade diversion. And a couple of companies that we have invested in and we're speaking to them, what to our understanding, they do believe that the end client, the US customers that they have, that Trump will only get harder, will only make tighten things up than actually loosen things. So they do believe that it's at their best interest to look for capacity elsewhere. And these companies that we are speaking to, they are actually seeing a lot of orders flowing to them, even through this current uncertainty. So even though if Malaysia were to be placed a certain amount of tariff, let's say 10, 15%, I don't see Malaysia being placed a higher tariff than China. That's the key here. US may place a 10%, 15%, 20%. I really do not know. I will know next month. But I don't see us being put a higher tariff than what is being put on China. So what we are capturing right now is those market share that have been flowing through from China. And if you look at the perspective of things, is how big is Malaysia compared to China? We have a population of 30 over million versus 1.3 billion. So 1% flow in manufacturing jobs from China to Malaysia, that's enough to stimulate the whole economy. So of course, not everyone will benefit. So we have to identify and see which companies will benefit from this. And we have invested in a few that we have spoken to the owners themselves, and they have told us that they're getting more jobs, they're getting a lot of inquiries, their customers are actually pushing them aggressively to expand. These are customers, American customers, who gave them a bit of jobs last time, but telling them right now that, you know what, they give them forecast that, please expand more. We need to bring down more jobs from China to Malaysia for you. So I do believe that there are pockets of opportunities here and there for investors.
Okay, Mr. Reza, do you see any good opportunities in the Malaysia market?
In short, yes. I totally agree also, with what Mr. Tan said. To time the market is like mission impossible, right? That is something that the industry has been practicing. You can never time the market. You should be constantly going in, averaging out. I think like Mr. Tan was mentioning, a dollar cost averaging. That is a very cliche term that the industry has been saying, but it's true. It's true. Rather than you try to go in only one time, try to pick the bottom, and in the end is not the bottom, it continues to go down, then that's it. You will lose your money. So be it whether it's Malaysia, it's global, it's regional, whatever that you want to invest in, do not just put all your eggs one time. That will be too risky, right? So coming back to Malaysia, whether do we see opportunities? In short, what Mr. Tan was mentioning, I totally agree. And just to further elaborate on this, because of also what we were talking earlier about the Trump's trade policies and whatnot, China being blocked, China is a big exporter of now, especially of late, is the technology we call DeepSeek, right? That has started to really balloon this whole tech in China, right? And given because of the trade policies, what will happen is also similarly like what the Trump's first term as president. He did the tariffs back then. What happened that we saw a shift of the supply chain, right? People were moving it down to Vietnam. People were moving it to Malaysia. So the supply chain was being diversified. So this story continues on now under Trump 2.0 at the same time. People are still looking in. Of course, Trump is also smarter. He knows that people are shifting. So he's trying to look at all this. So I think just now Mr. Tan was sharing about us being under the second tier category, wasn't it? So at least, but there is a probability of us getting more of these businesses from there. And last year, Malaysia market did very well. So I don't expect this year Malaysia markets to do as good as last year. If you look around the region, for example, in Asia region, it's been a mixed bag. Some countries has been doing well. Some haven't been doing so well. I think Singapore and China are among the good ones this year. Indonesia, last week, you saw all the drama that's been happening in Indonesia. I think the currency is also at the lowest since the currency crisis. Since the financial crisis, 97. So I was just sharing with my wife this morning. I think it's time for us to look at holiday in Indonesia. But that's off the topic. But Malaysia, at least we don't see that kind of drama or trauma that Malaysia is experiencing. So fundamentally, Malaysia seems quite sound. There is no what's the word? There is no kicker to really boost Malaysia up to the next level or really get the next rally. But fundamentally, I think we are quite sound. Like I said, we might benefit from the China shift of supply chain. We've got a lot in play. Technology, we are there. Healthcare, we are there. Most of the sectors, we are there. So to me, there are opportunities. In fact, our house view is that we are slightly overweight Malaysia at the same time. So we are still there. I wouldn't say we are really heavyweight on Malaysia, but we do believe that within the region, Malaysia is one of the good countries for us to be investing in. When, like I said, don't time it, just go in all the time, every time, anytime. That is our thoughts.
All right. Thank you, Mr. Reza and Mr. Gan Leong. We hear you that Malaysia is in the sweet spot for trade diversion, and there are pockets of investment opportunities here. Since we are also talking about ASEAN, we see that ASEAN markets have been quite weak year to date, with the exception of Singapore. Singapore, I think, year to date, it's positive in both local currency terms and in US dollar terms. Mr. Gan Leong, what's your view on the ASEAN market overall outside Malaysia? Probably you can talk about your favorite market like Philippines and so on. Over to you, Mr. Gan Leong.
So I think right now what we're seeing is this year, the markets in Asia Pacific that's doing extremely well is Hong Kong, China, right? The Hang Seng Tech Index, I think, is up more than, up 23%, even after the sell-off. I think Hang Seng also up close to 20%. So it coincides with the time where, when the Hang Seng Index doing really well, your likes of India, ASEAN, actually even US actually came down. So it's starting to look like it's a movement of fund flows where, your regional fund managers, your hedge funds, moving the money to, where it's hot or where they saw momentum. It also could have been triggered by the DeepSeek, whereby people thought, hey, you know what? China actually produce a lot of engineers every year. They are capable of innovation, and what we saw with DeepSeek, this could just be the beginning. There will be more DeepSeeks coming up. Then they start to see BYD, making a massive progression in autonomous driving, whereas Tesla have been struggling. So I think it's these few events people turn very positive of China. And hence why a lot of money have flown to China and in expense of your likes of ASEAN. So like it or not, a lot of Asia Pac fund managers, they play around these few countries. So that's why time and time again, when you see, Hong Kong do well, then Japan don't do so well, India don't do so well, then vice versa. So these things happen. So what we're seeing today is a lot of money is flowing to Hong Kong and China. But my point here is it's a market that's up 20% and it's also driven largely by re-rating. Obviously, your valuation, Alibaba at one point was trading at 8 times, 9 times PE. Today is trading at 13, 14, your low teens. So, we have to ask ourselves, okay, how much can you re-rate further? Because like it or not, China still have its structural problems, okay? They still have a large amount of youth being unemployed and still looking for jobs. And its underlying economy is still actually quite weak, Stock market's doing well, confidence starting to improve a bit, but they are still facing this problem, this confidence problem. The property markets are still struggling. Yes, there's slight improvement, but nevertheless, it's still struggling. So the strong stock market kind of actually papered through all these cracks and, people no longer talk about it. But I think deeply, if you look within China, structurally, they still have quite a fair bit of issues that they need to resolve. So, of course, the ASEAN markets are the one getting hit very badly right now. So, of course, we start to look at it from a money manager standpoint, okay? How often do you see a major index going up 30, 40% in a single year, whereas the rest of the markets are down? That's something we have to look at. So today we are looking at a base at this juncture, at this point of time, we're looking at a plus 20, plus 23, right? Plus 20 for the Chinese markets. So at plus 20, do you see going plus 30 this year? Whereas everyone will stay minus 10, minus 15, for the ASEAN markets. Do you see a possibility of that happening? That's why we are starting to see a lot of profit taking here. So unless there's a structural change. Whereas, China's economy, they do massive stimulus, then maybe there's still more room to run. But nevertheless, at this juncture, if you ask me, yes, I think, Chinese markets have been hit quite badly over the years, but so have the ASEAN markets. So within our regional portfolios, we do like Philippines quite a lot. Now, Philippines got hit quite badly. Philippines got one of very favorable demographics, very young population, growing. So we actually invested in several large caps within Philippines, companies that, for instance, one of our largest holdings, recently we just added, we built our positions like BDO, Unibank. It's one of the largest banks in Philippines, actually the largest bank in Philippines. When we entered it, we entered at a point where it's trading at 10 times PE, giving you about 3-4% dividend yield. NPL was stable, loan growth guidance were 11-12%. So by default, let's say it stays at 10 times PE that time, with a loan growth of low teens, we are looking at this stock, making you low teens sort of returns. And because Philippines is starting at a much lower base compared to even Malaysia, Singapore, or China, we do see a lot of room for growth. So we bought like the public bank of Philippines, and we see a lot of opportunities like that. We bought into SM Prime Holdings, which owns more than 50% of the malls in Philippines. We managed to get in. Last time, this stock used to trade at 40-50 times PE. Today, we are getting it at below 20 times PE for, your likes of it's bigger than your IGB, or they own more than 50% of the market share of the malls in Philippines. So we saw a lot of these opportunities where stock that used to trade at very high valuation. Of course, right now, because the market is not, people are not in favor of the market, simply because, number one, when people are risk off, they stay away from ASEAN. So that's why we see a lot of sell-off. Number two, there's a lot of flow of capital from the ASEAN markets to Hong Kong and China because those markets are doing well. So we see opportunities. We see opportunities to invest in good companies. These are not small caps. These are large caps. They're large companies at great prices. And we do believe that the growth trajectory is still intact. So, and we have met several of these companies recently, and it seems like this is the guidance that they have given to us. So, yeah, that's Philippines is one of the markets that within our regional portfolio that we actually are in favor of.
All right. Thank you, Mr. Gan Leong. So for summary, we see that we see recent rally in the China market. India has been weak year to date, but recently we have seen some recovery in the market. US market has been very flat, and a generally weak ASEAN market. Mr. Reza, where do you see the best opportunities for investors to invest going forward?
This is where I need to take out my crystal ball and so okay. It's again, I think the whole narrative of our session today is the world is volatile going forward, right? So it's going to be tough for us to say like, okay, put your country in Malaysia 100%. You will guarantee me money. No. Okay, don't. It's not going to happen that way. It's going to be tough because of the situation, right? So even to say that what is the best opportunity for us to suggest to invest is, to me, the best opportunity is actually to diversify. Because if you put all your eggs into one basket, that egg collapses, that's it. That's the end of your life. Versus if you were to spread it out, to me, have that in mind that, things are very volatile. It's tough for us to see. I think we were talking about, it's hard for us to even forecast, let's say, for example, a week ahead, and even the forecasts are changing. Historically, we thought the US is going to cut rates by about 3-4 times. Now, if we reduce it to maybe 1 or 2 times, just now your question was, is it going to be 0 cuts? It's tough for us to forecast. So similarly, where should I put my money forward? It's going to be tough for us to suggest per se. All we can say is diversify. And the best diversification is, of course, to look at it globally, right? Then you can, so globally, basically, you can invest in almost every country, depending on what the fund manager decides. Or you think that, oh no, I don't want the US, Trump, I don't like Trump, maybe so I want to avoid that part. So it's okay. You can then diversify it across the region. So there are regionally, Asia, you can have Japan, you can exclude Japan, or you want to look at ASEAN, where we are, which is closer to home. Sometimes people prefer investments which are closer to home because then it will be the names which they are familiar with. So to me, it's tough for us to really recommend what is the best. And given the current scenarios, the best recommendation I can give at the moment is to diversify, be invested there, because again, you do not want to miss the boat, right? Like COVID, if we had not invested back then in COVID, everybody was panicking, they all ran out. But after that, you saw what happened, you missed that boat, thank you, bye-bye, you know, there goes everything. So stay invested, but keep diversified. Of course, because we are close to Asia, we are comfortable in Asia, and we know that it will also be a benefactor of the Trump tariffs, right? We're talking about that, the chain supply disruption that's going to happen. So we talk about that as well, where it will benefit Asia. I mentioned earlier, Vietnam has benefited, Malaysia has benefited. These are all part of ASEAN also at the same time. And I mean, UOB being an ASEAN entity, these are things which we are always keeping an eye out. So of course, if you ask us, ASEAN will be a good thing, but definitely to me, have spread out your portfolio as well, to have some Asian exposure as well as global, because we do not really know where the opportunity is going to lie, right? It could suddenly, for all you know, suddenly US could start flying up again, and you know, everybody loves Trump, and the share market just source. So keep your eggs in all the baskets, not just one basket. That's my advice.
All right. Thank you for the advice, Mr. Reza. I think the key takeaway here is diversification, right? And that will also help investors to navigate along the market challenges. Finally, before we end the session today, Mr. Gan Leong, would you like to share some of the funds or products offered by CAF investment funds that you believe could benefit the investors?
So for us, we have always been very big in our funds are very concentrated in investing in Malaysia, our domestic equity funds. And of course, our flagship fund, CAF Core Income Fund, have delivered, I would say, very attractive returns for investors in the last 5 years. So, of course, this year is a very challenging year. I think at this juncture, if I'm not mistaken, CAF Core Income Fund is down about 13% this year. Of course, it's underperforming the, your FBM KLCI, and probably underperforming some funds, some maybe your likes of your public mutual funds and all. But what we want to communicate to investors is this also. Look back in 2020. 2020, I think in the first 3 months during the market sell-off, it actually impacted us quite badly. So I think CAF Core Income Fund at that point of time in the first 3 months were down close to 40%. It actually underperformed not only the benchmark, but underperformed most of his peers within his category. But then, of course, post 2020, after the first 3 months of 2020, when the market were to rebound, CAF Core Income Fund actually ended the year plus 70. And since then, I think every year, CAF Core Income Fund actually made money and never lost money since 2020 until today. So my point here is, yes, at this juncture, we are underperforming the benchmark and some of our peers as well. But we also want to highlight that we are stock pickers by nature. So during bad periods, we do get hit harder. But of course, when markets were to come back, we have a tendency of, historically, we have outperformed the markets as well. So I think for investors to look at it is this: do you believe that equities will come back? If you don't believe that equities will come back, then yes, you shouldn't invest in our equity fund. But if you believe that equities will come back, that markets will eventually come back, and time again, we have seen, you have your Asian financial crisis, your subprime crisis, your pandemic crisis. We have gone through, these are the last 3 major crises, your dot-com bubble. Markets always come back. Okay, so every time, if you just track the investment horizon, time and time again, you will not only recoup what you've lost, but you tend to make even more after every crisis. So during that particular period, yes, you may be losing money, whether it's your pandemic crisis, your subprime crisis. But if you look past, today, a lot of these funds are higher than the previous crisis. So it's more of a time interval thing. So for us, we are still asking investors to stay invested. take a longer term investment horizon. And I think some people may argue that, what commonly questions that we get from feedback we get from investors is, oh, why don't I just invest in the US markets, right? US markets have been outperforming the Malaysian market, outperforming the Asia Pac markets, right? Might as well just buy US ETF, right? Why not I just buy the Nasdaq ETF and invest in your fund? Well, if you look at the last 5 years, last 5 year annualized return of our fund, which is above, so I think 26% or something, is actually higher than what you would have gotten if you invested in Nasdaq. So the point here is, it doesn't matter which region you're investing in, which markets you're investing in. The point here is we have delivered actual returns for investors. We are struggling right now. It's a tough period for us right now, but time and time again, we have shown that investors who have stayed invested with us tend to be rewarded. So the product we are pushing for our local funds, it have been core income, and that's our flagship fund. And we do hope that people stay invested.
All right, thank you, Mr. Ganil. Over to you, Mr. Reza. Would you like to share some of the products or funds that would like to recommend to investors?
Yeah, sure, thanks. To me, I take a slightly different perspective. From the beginning, I was talking about objective, right? So I look at, for example, investing Islamically. I mean, of course, I'm from UOB Islamic, so I'll look at it from that perspective. But I don't see it as being a pure religious play, if you may. Right? I see it also as an investment strategy. When you look at investing via the Islamic way, actually, what does it do? It actually builds in some risk management tools inside. We look at the financial ratios of the companies. If the companies are over leveraged, for example, we not invest in companies which have excess cash, for example, which are waste of resources, we don't invest in. So these are already inherent built-in risk management tools into the Islamic investment universe. So to me, that is a very interesting fundamental methodology that's already embedded in. So first, I will always recommend people look at it. What's wrong with it? It's already inherent. The procedure is placed in from Securities Commission. So it's not like something that we want to just simply whether we want to or we don't want to. It's already built in, right? So that's one. Secondly, the universe. So typically also, if you look at the performance of Islamic investment versus the conventional performance, you will find that sometimes the performance also differs in different times, different economic situations, right? So typically, when the world is doing well, everything is rosy and dandy, markets are booming, the conventional investments typically will do well, generally. Why? Because when the market is doing well, economy is doing well, the banks are the first to benefit, and the banks will then the shares of the banks will fly. But guess what? Islamic banks we don't have, because it is one of those investments which are not permitted. All right. So of course, because of such, the Islamic will tend to underperform when markets are doing very well. Right. But on the other hand, because the Islamic does not have financials, it has to increase investments in other areas. So what area are there? The most predominant sector is technology. So now we will also be speaking a lot about technology being in the limelight, if you may, for in terms of investments. So now if you're able to diversify your investments with a built-in risk management facility that focuses on on technology sector, why don't you consider looking at Islamic investment? So be it UOBs, of course, I will recommend UOBs Islamic funds or any others, right? So that's the first part. The second part, if I can also suggest, is to look at ESG, right? Environmental social governance. Trump is not a big proponent of that. I disagree with Trump. I just bought 2 EV vehicles this year because I'm a big proponent of environmental social governance. Why? Again, because the ESG actually adds transparency into your investment. Before this, no one looks at governance not from a structured manner. They might look at it, I mean, when we do our financial fundamental analysis, we might look at the governance of a company. But however, not in a structured manner that we do today with ESG in play. Right? We never look at environmental factors as a consideration of our investment. We never look at social aspects. From Top Glove case during the COVID, we know that the social factors, how you treat your employees are very important. Your share price can just plunge down the ravine as a result. So ESG to me is not a good or important factor for us to be looking or promoting, right? So given the volatility that we've been mentioning all this while, and how I've also been saying about diversifying and Islamic and ESG, putting all of these things together, what I would suggest is this United I Global Balance Fund, which we have. Right, so I won't go into the details of performance and whatnot. The fund is available, I believe, even on Phillip Capital website. But just look at it from that. So what I'm talking about is the fundamentals, the objective. What are you looking for? And it's been around for the last 5 years, if not more, of the fund history. So you can have a look at it. And it means all the fundamental objectives. It means the diversification story is a long-term play. It's a mixed asset, all right? So you have equities and you have bonds. We haven't spoken much about bonds in this particular panel session today. But to me, that's another area that we should be looking at. For UOB asset management, we just upgraded our views on our asset allocating into fixed income space. And we actually downgraded equities, actually, to be fair, because of US predominantly. So we upgraded fixed income, we downgraded equity. So in a way, this is an asset allocation play where we will always be, should I go into here, should I go into there? So when you go into a type of a balanced type of portfolio, you don't need to worry about whether should I buy equity, should I buy fixed income. At least let us worry. Let us determine the asset allocation part of it. The fund currently can swing 40-60. We're looking to make some changes to it, but at the moment I can go 40-60 into equities or into bonds at any point of time. But of course, invest Islamically. So that is what I would suggest. At least keep your peace of mind. Have that to me as a sort of like a core investments, and then opportunistically you might look at some other tactical strategies that you might not have. But I believe that this strategy should be a core holding that we should have, and something that we should keep for the longer term. So yeah, I think I've taken a fair share of my time. Thanks, Kim.
All right. Thank you, Mr. Reza, for your sharing. I think it's a very interesting perspective to talk about Islamic investments, and that is what UOB Islamic Asset Management could offer to you. And we also like to thanks to Mr. Tan Gan Leong from CAF Investment Funds. He shared a lot of opportunities in Malaysia market, and there are also a lot of offerings in Malaysia equities and Asia Pac space offered by CAF. I think we can wrap our session. Thank you so much. We are very honored to have Mr. Tan Gan Leong, the head of investment of CAF Investment Funds, and also Mr. Suhaisi Reza Selamat, the CEO of UOB Islamic Asset Management. Thank you for your insightful sharing, and we also appreciate your time, right? And also your continuous support to Phillip Capital. Thank you so much.
Thank you very much for having me.
Selamat Hari Raya to all.
Bye-bye.
All right, thank you. Take care.